Welcome back. Surbhi's now moved over to the big wall. She's standing by with a roundup of some interesting details on investor behavior of late. Surbhi, what are you picking up based on March numbers?
Well, March data from the exchanges and depositories is throwing up some pretty interesting investor behavior trends. First of all, the trend of new Demat account openings is slowing down. Now, though the total number of Demat accounts continues to rise at an absolute basis, the incremental new account addition is what is seeing that drop. March actually saw 19 lakh new Demat accounts being opened as opposed to 21 new lakh accounts being opened in February. In fact, this trend, you can say the decline has started in January after having a decent end to the year. The number is also well below the monthly average of 29 lakh new Demat account openings that we saw throughout FY22. So if you average out every month of FY22, then we were at 29 lakhs. That number for March is down to 19 lakhs. So that tells you about the pace of the decline. Now, lackluster markets are probably the key reason behind this drop in fresh Demat account openings. And that could also be the factor behind the steady decline seen in NSE's total active client base, which has been falling for 9 consecutive months, according to Motilal Oswal, and it's come down to 326 lakh accounts in March. Now, mind you, even though the number of NSE active clients is almost down 9.5% in March of 23 versus last year, discount brokers aren't complaining. Their dominance actually has been growing steadily throughout the last 1 year, with the top 5, that is Zerodha, Upstocks, Angel One, Grow and 5 Paisa Capital making up now for 60% of the market share. Let's come to another interesting trend, and this is retail investors, or should I maybe say retail traders, increasing their interest in the futures and options market. Let's look at the basic turnover trends to begin with. Now, despite the market remaining absolutely flat over the last 18 months, average turnover has been pretty healthy. In fact, it's up from 95 lakh crores in March of 22 all the way up to 236 lakhs crores. That's almost 150% jump in that 1 year period. Now, this is largely courtesy the rise in F&O volumes. Let's look at the average daily turnover in the F&O segment, which is up in March 148% over last year, and it's a 13% increase compared to February 23. It's not just seasoned traders, but retail has also decided that it doesn't want to miss out on the F&O opportunity. Motilal Oswal points out that retail segment average daily turnover has grown about 12.5% in March over February, the month-on-month growth if you're talking about Feb 23 and March 23. But the more stunning comparison is on a year-on-year basis. If you look at the average daily turnover in the F&O segment, retail turnover, then we're talking about a massive jump. From a level of 40 lakh crores in March 22, that number has moved up to 87 lakh crores in March 23. Contrast this with the cash market activity, and cash market retail volumes have actually dropped in the same period, the year period, by a little over 28%, and they've come in at about 237 lakh crores. So there we have it. It's quite clear that the retail investor is willing to experiment with newer ways of making money and is perhaps heading from the cash to the futures and options market. Well, that's the data. Let's try and figure out, whether this is a real new emerging trend that's here to stay, or is this an aberration because of the way the markets have been. We have Sandeep Bhardwaj, COO and CDO of HDFC Securities, now joining in. Sandeep, thanks for being with us. So I was looking at sector-wide trends, and I think, a lot of it is very apparent if you're looking at numbers from, let's say, Angel One or some of the other big discount brokers. But you tell us, is it really just that? The cash market is not allowing you to make quick money. It's been a painful long wait. And that's why perhaps retail or a section of retail really wants to now try their hand in the F&O segment.
Sure. Thank you for having me here. See, I think largely number you have already shared, from Demat, new account Demat participation, from ADTO participation, derivative, we already seen over 100% growth in retail turnover. The market, which is 40, has already moved over 80 lakh crore. And on a cash side, if you look at the cash side, which was 33,000 crores, has come down to 23,000 crores. And I'm talking retail cash participation. Now, let's look at what's happening in terms of customers holding. How customers are holding. One interesting number which I want to share, which that retail ownership of NSE listed universe has declined from 16-18% from 2001, 2002 to 8-9% 22. It means the total market capitalization of NSE listed company retail only holds 8-9%. Vis-a-vis what has happened during the COVID, this 8% grew to close to 10%. which we are again seeing a decline of 52 basis point by financial year 23. So ownership level, other than turnover basis, ownership level also, we are seeing a downtrend in terms of people holding that. And let's look at why people, trades in derivative, because it's in various forums, it has been talked about the derivative turnover is growing. But why people trade in derivative? Today, if you look at Nifty,
before, if you could just allow me to come in, because you mentioned a very important point in terms of ownership. I think you mentioned NSE 100, right? You said ownership in terms of retail investors owning these companies. It went up to about 10% in COVID, and now it's come down 56 basis points.
Yes. So if you look at 2001, when it used to be
Sandeep, what I'm trying to understand is that while COVID, obviously, it's a no-brainer, right? People were sitting at home and they were coming to equities directly. There was a lot of direct stock picking happening, but SIP numbers are still very strong. So retail investors are still investing through mutual funds. Then what accounts for this decline in ownership of NSE 100 companies by the retail segment?
See, if you look at the SIP number, month on month, it has already reached 14,000 crore, close to 14,000 crore. So it's like a tactical shift of retail participating in indirect equity. In direct equity, from a stock point of view, it is always a pain for retail customers to choose, pick and choose stock. And it also emotional where people end up booking losses or profit quickly. Vis-a-vis in mutual fund SIP, it is a long-term instrument. People are stick to in terms of their behavior. So I would say it is a shift. It's a tactical shift in from direct equities to mutual fund way of investing. And as far as ownership is concerned, we saw, I think from 2001 till 2019, it was a constant decline in terms of ownership of NSE listed companies. But during COVID, when we saw close to 2% of the ownership high, which again we are noticing that it has already down by 6 basis point.
So this retail ownership number of 10% that we are currently at, close to that, that takes into account the SIP numbers, right? This is not just direct investment into...
Yeah, this is mutual fund investing also. Yeah.
This includes that. And despite that, we are seeing a drop in the overall equity participation and ownership.
I'll give you another interesting point. So retail investors was net buyers in 2020. They bought close to 500 million. That happened after 11 long years. The net buying before that came in 2001. Post that net buying came in 2020. We always looked at mutual fund net buying versus net selling. But when you look at retail, this has happened after 11 long years. And between 20 to 22, then they invested close to 2.79 trillion in NSE capital market. But when you look at current December last quarter 2022, we have seen again 1.42 billion of selling happening out of it. It means the people are either a profit booking or they are booking losses. They are moving out of retail equities.
Okay, got that. Sandeep, let me come to you on the F&O figures as well that Surbhi was talking about, right? We're seeing some big numbers there, and perhaps this money in a market which is just moving sideways is now moving to F&O in hopes of perhaps better returns over there. Take us through what else you're picking up, and is this, considering that we have been talking about the fact that this entire year is likely to be like that, we're not likely to see much in terms of a gain. Do you think this is a trend that's likely to continue? And of course, any other trends if you have picked up from the F&O space as well in terms of retail participation?
F&O retail participation, if you look at this is March 23, it is 3.2 million. So which is constantly, growing from derivative point of view. Cash we've already seen, the markets have seen a significant decline on retail participation. But F&O participation, there is a strong, growth, and it is growing. So which was 31.5%, which was the market share, retail market share in derivative, has grown to 35.6% market share in overall market share. So which has taken it to 40 lakh crore to 87 lakh crore, which is over 150% growth. But what we need to understand is why people are trading in derivative, why option. So when you look at, you buy one Nifty contract in future, you end up buying a 1 lakh, future or cash for that matter. You have to have either 100% of the margins in cash, and future is close to 1 lakh rupees of margin for a current Nifty value. But the same thing if you want to buy in the money, at the money call, you only require 2,000 rupees close to margin, which is 2% of the total value, which is very, for retail point of view, which is not a very big number. So that encourages people to take positions into derivative, especially into, options.
Sandeep,
so I personally see that this is continue to grow.
But I'm sure from your standpoint, you'd love to see this grow. But I'm just wondering, I go back to SEBI's study. Remember at the start of the year, SEBI came out with a study that 90% of active traders have actually lost money in the futures and options market in 2022. I'm sure SEBI is also noticing and watching these trends. So would you expect regulatory action? Retail's getting active in not futures but options because margins are lower there.
Yeah, it's largely options.
Yeah, so you know, do you think there'll be action from the regulator?
I think regulator in last 2 years have taken a lot more action in terms of building up peak margins. So there's a uniformity, and brokers don't give excessive margins to people without adequate position, without having adequate margins. So by this peak margin regulation has already played a significant role. But in spite of that, we are noticing the constant growth in derivative turnover. And that largely happens because your invested surplus, where over the invested surplus, as I already explained you, for buying a 1 Nifty at the money call, you need to only have margin of 2,000 rupees. And even if you earn 500 rupees over it, which becomes a 25% gain, which against you take it on a future, which becomes a less than a 1%, or in terms of cash, your surplus amount is very high. So that discourage people to maybe participate in cash or maybe future to some extent. And options becomes a direct beneficiary for that.
Well, let's see if the regulator intends to change that a little bit. Exactly, because as you said, you need to put a margin of 2,000 rupees, and you can trade in options on that. Very interesting trend, Sandeep, and thank you for joining in and expanding, of course, the data points that we were looking at. Good talking to you. Thanks for being with us. Okay, well, there we have it, the rise of retail in the futures and options market. We'll take a quick break on that note. Lots more coming up.